How BlackRock quietly became the most powerful company in finance. Most people have never bought a stock directly from BlackRock. They don't open an account, call a broker, or walk into an office. And yet, almost everyone interacts with its power every day through retirement funds, college savings plans, even the price of your morning coffee. BlackRock doesn't make cars, cell phones, or drill oil, but it owns slices of almost all of them. With over $10 trillion under management, it quietly controls more wealth than the economies of most nations combined. What makes this company extraordinary isn't its size alone, it's how invisible it is. While banks chase headlines and hedge funds gamble publicly, BlackRock moves silently, using technology, data, and influence to reshape the global economy without drawing attention. Its fingerprints are everywhere, in corporate boardrooms, in government policy, and in the algorithms guiding trillions of dollars in investments. Ordinary investors unknowingly feed its power through index funds and ETFs, while policymakers and central banks seek its advice during financial crises. In a world that measures influence by visibility, BlackRock proves the opposite. The most powerful players are often the quietest. Understanding its rise is like looking behind the curtain of modern capitalism, revealing a company that, while rarely seen, touches nearly every corner of our financial lives. Let's watch. 1. The origin story born from a disaster. BlackRock's power began with humiliation. In the 1980s, Larry Fink was a rising star bond trader until one bad bet wiped out $100 million in a single day. That loss scarred him and planted an obsession. Markets were too chaotic, too emotional, and too blind. Finance needed a brain. In 1988, he founded BlackRock with a radical promise: every investment decision would be ruled by risk management first, profit second. At a time when Wall Street worshipped big personalities, BlackRock worshipped math. Pension funds and cautious institutions loved it. While other firms chased quick riches, BlackRock became the adult in the room, quietly collecting other people's money to manage. By the early 2000s, it had grown from a small desk to a global machine, trusted precisely because it looked boring. But boring, in finance, is how empires start. 2. The F explosion, owning everything without buying anything. The real takeover didn't happen through flashy deals, it happened through something ordinary: index funds. BlackRock's iShares ETFs allowed anyone to buy the whole market for tiny fees. Instead of guessing which company would win, investors could own all of them. This idea sounded simple, even harmless. But as trillions poured into these funds, BlackRock automatically became the largest shareholder in Apple, Microsoft, Coca-Cola, oil giants, banks, airlines, almost every corporate name you know. The company didn't need to conspire, gravity did the work. Every teacher saving for retirement, every worker with a 401k, every small investor clicking buy ETF was quietly handing BlackRock more influence. Without firing a single shot, it became the universal owner of capitalism itself. 3. Aladdin, the secret brain running Wall Street. Most empires are built with armies. BlackRock built one with code. Its software platform, Aladdin, is the most powerful financial surveillance system on Earth. It tracks risks across tens of trillions of dollars, stress tests wars, pandemics, elections, and interest rate shocks before breakfast. Banks, insurers, and even BlackRock's competitors plug their portfolios into Aladdin like patients connecting to a hospital monitor. During the 2008 crash, the US government turned to BlackRock to dissect the toxic mortgage mess because Aladdin understood the market better than regulators did. Think about that, a private company was asked to diagnose the financial system itself. From that moment, BlackRock was no longer just another firm, it became infrastructure, the unseen operating system of global money. 4. The company governments call on emergencies. Whenever markets catch fire, BlackRock gets the phone call. During the Eurozone crisis, European leaders asked for its advice. In America, the Federal Reserve hired BlackRock to help run emergency bond buying programs. Central banks treat it less like a company and more like a public utility with a profit motive. Critics call this a dangerous marriage of state and corporate power. Supporters say only BlackRock has the tools big enough to handle modern crises. Either way, the result is the same. Policies that shape housing markets, interest rates, and even climate finance are drafted with BlackRock in the room. It has achieved what old robber barons dreamed of: power without elections, influence without visibility. 5. The whisper that moves boardrooms, BlackRock rarely screams. It whispers and CEOs listen. Because it owns slices of nearly every major corporation, its votes can decide who sits on boards, how executives are paid, and whether companies chase green energy or fossil fuels. A single letter from Larry Fink to CEOs about climate risk shook entire industries. Unlike activist investors who launch public wars, BlackRock works behind closed doors. One meeting, one vote, one subtle warning can change a company's future. To critics, this is unelected governance of the economy. To supporters, it's responsible stewardship of ordinary people's savings. But one fact is undeniable. When BlackRock speaks, corporate America hears a command, not an opinion. 6. Too big to ignore, too central to fail, BlackRock insists it is merely a manager, not a master, emphasizing that the money it oversees belongs to clients. Yet its sheer size transforms this claim into something far more consequential. If BlackRock's systems were to fail for even a single day, ETF markets could freeze, pension funds could falter, and governments might struggle to sell bonds. The firm has become like oxygen rarely noticed, yet absolutely essential for the functioning of modern finance. This concentration of power makes many uneasy. A single technical glitch or a flawed model within Aladdin, its proprietary risk system, could ripple across global markets with catastrophic effects. Despite this, regulators tread lightly, hesitant to impose restrictions on a company the system now relies upon. BlackRock did not merely enter the financial game, it reshaped the game itself, making its infrastructure indispensable. In doing so, it quietly became both the backbone and the gatekeeper of the global financial system. 7. Redesigning capitalism in its own image, the most striking and controversial aspect of BlackRock's rise isn't simply its immense wealth, it's the way it quietly shapes the future. By directing trillions of dollars towards certain industries favoring renewable over coal, technology over traditional manufacturing, it effectively votes on what the next world will look like. Countries compete fiercely to attract its investments, while companies adjust strategies to align with its risk models. Even debates over social justice, climate change, and corporate governance are filtered through BlackRock's spreadsheets, giving the firm an unprecedented role in determining global priorities. This is a form of power that past generations would have called imperial, yet it was never seized through conquest or coercion. Instead, it came through convenience and trust. We asked for low-cost index funds, stable retirement plans, and smarter ways to manage risk, and BlackRock provided them. The result is a quiet transfer of influence so subtle that most people barely notice they've handed over control of vast swaths of the economy.